and welcome to the Yes Option Weekly Analysis. My name is Cassandra Noy, and here's the latest for Sunday, the 5th of May. In a week shortened by many indices being closed due to national holidays, it was left to data releases in Europe and North America, as well as escalating tensions in the Ukraine to drive markets. In the US, preliminary data showed that gross domestic product grew at an annual rate of just 0.1% in the first 3 months of the year, well below forecasts for a 1.2% expansion. Despite the slowdown in growth, the Fed maintained its bond-reducing policy, reiterating on Wednesday that interest rates will be held at their record low for a considerable time. The US dollar enjoyed safe haven support for much of the week, but gave up most of the gains on Friday on the release of a report showing that the US economy added jobs at the fastest rate in more than 2 years, with the U.S. unemployment rate dropping to a 5.5-year low at 6.3%. Last week, the British pound rallied above 1.69 to its highest level since August 2009, after it was revealed that the UK economy is growing at a 3.1% annual rate in the first quarter. Compare that with the growth in the U.S., 0.1%, and you can see why the GBP is being supported so heavily, despite the UK's current account widening to 4.39% of GDP, the largest deficit since 1990. The best performing currency pair this week was the Kiwi dollar, which rose for 4 out of 5 trading sessions and hit fresh 2-year highs, ahead of unemployment falls expected to be announced next week. Stocks closed higher for the week in Europe and the US, with the German DAX and America's Dow Jones and S&P 500 at record high levels after strong earnings reports from the U.S. boosted global investor appetite for high-yielding assets. Meanwhile, it was jitters in the Ukraine and bearish data from the U.S. that bolstered support for precious metals, with gold and silver rising nearly 1.5% and 3% respectively on Friday, with gold up 0.16% for the week. U.S. supply levels saw early cold weather-related gains in natural gas wiped out as inventories rose more than the markets were expecting. An upbeat U.S. April jobs report, along with fears the Ukraine crisis will escalate and threaten Russian crude exports, sent crude oil prices rising on Friday, up over 0.5%. So, what's in store for the week ahead? Investors will be focusing on Thursday's ECB monetary policy announcement, as well as interest rate reviews by the Bank of England and the Reserve Bank of Australia. Australia, New Zealand, and Canada will release employment reports, and the U.S. will publish service sector activity data, all of which will be closely followed. No shocks are expected in central bank policies or rate movements, but the Yes Option team of experts are targeting the Canadian unemployment data on Friday at 1:30 p.m. GMT as a great profit opportunity. Last month's 43,000 rise was a welcome surprise, but history tells us that when it comes to Canadian employment, a big figure can often be followed by a disappointment. So put options on the CAD on Friday should seem a good investment. The technical outlook for crude oil looks bearish, and we expect further declines ahead, possibly to as low as $97.50 a barrel, making put options on crude oil a sound choice as supply levels remain at a 26-year high. Remember, at Yes Option, making call and put options can generate returns of up to 89% in as little as 60 seconds every trade, so start profiting today. That's all from me, Cassandra Noy. Be sure to tune in same time, same place for the latest Yes Option Weekly Analysis. Goodbye for now.